Thanks, Nisa. So on the Bitcoin network this week, we've seen the highest level of transaction value that we've seen in the whole of 2020. So looking at it on a 7-day moving average, we've had $4 billion of settlements per day over the last 7 days. You can see from the light blue line at the bottom of this chart that the settlement value per day has been trending upwards since January and has really spiked over the last week or so as price has surged up to that $12,000 level. We've had a few days between 4 and 5 billion and a couple of days over 5 billion, which really happens only sort of once a quarter normally. And this week we've had about 3 days where that's been the case. So there's a lot of activity taking place, which is of course bullish for the overall network. Now, if we look at network velocity, which is essentially the amount of coins or the speed that coins are moving around the ecosystem, it's a similar thing to transaction value, but taking away the dollar price and just looking at the movement of the coins. We can see here that velocity is now pushing back at that 600% level, meaning those coins move 6 times per year. I really like this chart because it shows the relation between velocity and price from the beginning of the year up until now. So starting at the far left, we can see as velocity sort of climbed from those lows of about 480, 500 up towards 600. The price then followed. As velocity dropped in May, we can see the price also dropped. And then as we had that steady rise between April and June of velocity from 600 up to about 650, 680% was the peak, then price also followed suit. And then finally, as we see from June going down into August, just before this latest let's say short-term bull run, velocity has been dropping, and that's led to price dropping. So it really clearly shows the relationship between the amount of times or the speed that Bitcoin are moving around the economy, which is the sort of demand on chain, and then that impact that has on price. So it's one to look out for. So now moving into the miners industry, we can see that fees continue on their upward trajectory. They peaked at about 18% of total revenue. Now, outside of halving, that is really quite impressive. They're now well over $10 million per day of revenue for miners, so nearly $2 million per day just through fees. Again, that's a sign that a lot of people are trying to use the network. We're seeing that block times are quick. So it's not about sort of having not enough having congestion on the network because of a lack of new blocks coming through. It's actually just this surge in activity that's taking place. So we've got more transactions taking place, which means that Bitcoin are moving faster around the ecosystem, and that's all positive and driving up price. Finally, we're going to have a quick look at the MRI, the miners rolling inventory. So this is basically the difference between what miners are generating and what they are then moving from that wallet that they've generated. So when the line is going up, they're essentially selling off their inventory or moving their inventory away. And when that line is going down, they're building up their inventory. And what we can see here is there was a sharp spike from mid-July into August. August, sort of early August, late July is where they really capitalized on this surge in price up to the 12K mark and sold off their inventory. So you can see that really sharp upward trajectory of the MRI hitting 106% peak as miners took advantage of that firm bid in the market. We're currently sitting at about 101%, which means that miners are continuously sort of dropping their inventory or selling their inventory, moving their inventory into the market. We'll wait and see what happens next. As long as there's a strong bid in the market, we expect miners to take advantage of that. When the bid drops off, price starts to look weak, we typically see that miners will hold back on their inventory and wait for brighter days. That's all from Onchain Reaction this week.